the latest data would support that picture of resilience, particularly on the consumer front. But at any rate, you are still at some level de-risking your portfolio.
Not really. What we're doing is we have been in large cap growth year to date, right? So what we have been changing is that we're decreasing our positions from the mega caps, large mega caps in tech, and we are rotating into the middle tier large caps. So I think the rally year to date was with 7-8 stocks. 50% of the Russell 1000 growth is 7-8 stocks, including Nvidia or Tesla. We've been in Nvidia since 2013. We think valuations are a little bit elevated, and the companies that have lagged behind, the rest of the large caps, will have better potential in the next few months. So we're still in growth, tech and healthcare, but we're rotating out of the large mega caps into the middle tier large caps.
We saw another leg of momentum when it comes to AI. If that is still a theme that you want to stick to for the medium and long term, where are you finding some of the better valuations at this point?
So with AI, there are small caps that we're looking at, but again, our biggest weight has been Nvidia, and I think that's the safest way to invest in AI, because we do not know who is going to win the race. But at the end of the day, Nvidia will provide the GPUs to all these generative AI companies. So it's like investing in Microsoft back in the day when they produced the hardware. So it's the same concept now. You go to the backbone of AI, which is Nvidia. So we continue to maintain a heavy weight on Nvidia, but just because they have rallied so much, Nvidia, Tesla, and the 7-8 mega caps, we think it's prudent to decrease the weight you have in these stocks and just reallocate to other large cap companies.
We are seeing a little bit of a hit for Nvidia after hours, given media reports that we might see these new restrictions on exports of AI chips to China that might affect Nvidia. How are you thinking about these geopolitical tensions affecting some of those names that you're positive about?
Part of it is political, so I do not pay too much attention. I think in the long term, we'll see things stabilize. I think Nvidia will maintain their position, but globally, I think there's just, when it comes to China, we've seen there's a lot of risk. So there are other companies that we're looking into China where we're decreasing our weight. So we've been maintaining a super small weight in China in the last year. We think that although it's one of the few deflationary environments globally, there is high risk. As we've seen, the real estate contract, unemployment among the youth is above about 20%. And as the global economy is contracting, demand is coming down. That means that China, as a producing and manufacturing economy, will struggle in the next few months. So in China, we're decreasing our weight further, but when it comes to Nvidia, I still believe they have a good future going forward.
You talk about global growth being challenged, but at the same time, we continue to get this very hawkish rhetoric coming from major central banks. What will be the fallout from that if we do not see a turnaround in terms of monetary tightening globally?
So I think the European markets, regardless of the tightening, they have done extraordinary. Would I go back into them right now? No, I think valuations are a little bit stretched. Again, with Asia, I do not see a lot of potential there. I maintain my position that the safe haven right now continues to be the US, especially with large cap tech and healthcare. As we see inflation coming down, growth companies will outperform. So I think we'll continue to see tech outperform and healthcare outperform the rest of the categories in the next few months. And I think globally, so what I would do is maintain obviously a speculative small position globally, but have a much bigger weight in the US.
We are really ahead of the stress test results coming here for U.S. banks. After the banking turmoil that we saw in regional lenders, do you have any expectations of opportunities that can still be found in that sector?
So this is a market of haves and have-nots, and it all comes down to who you're banking with. So we have regional, smaller companies that are banking with regional banks, and they have now financing risk. So I think it's important to see who each company you're looking at is banking with. At the other side, you have the large companies banking with the big banks, and they're benefiting from long-term interest rates that are very low. So it's really markets of haves and have-nots, and that's why year to date we've seen large caps drive this rally. Although I do think that small caps that have lagged behind year to date have better potential going forward in the next few months.